Yo, what's good, fam? Welcome back to Insurance Hacks America, the channel where we flip confusing financial stuff into simple, everyday hacks that actually work for normal people. No corporate jargon, no textbook talk, just straight facts. Today, we're breaking down something most people avoid because it feels scary or complicated. Life Insurance 101 and how to protect your family on a budget in America. But before we jump in, let me hit you with a real scenario. Imagine you're the main breadwinner, paying rent, groceries, school fees, medical bills, basically holding everything together. Now picture something unexpected happening. Your family is left with all those bills, maybe even debt, but no financial backup. That's the reality thousands of families face every year. Life insurance is not about preparing for death. It is about making sure your family doesn't collapse financially when you're no longer around. Stay with me until the end because I'm going to share insider tricks to save up to 60% on your policy and avoid industry traps that most people don't know exist. So let's break this down in plain English. Life insurance is basically a deal between you and the insurance company. You pay a small amount every month called a premium, and in return, the company promises to pay your family a large cash payout called a death benefit if you die. The money your family receives is usually tax-free and can be used to cover literally anything. Rent, funeral costs, medical bills, childcare, college tuition, or just keeping food on the table. Think of it like financial armor for the people you love. It isn't about planning to die, it's about planning so they can live. Let's talk about how much coverage you actually need because this is where most people mess up. A lot of folks just get a $50,000 policy thinking it's enough, but that barely covers funeral costs and maybe a few months of bills. One of the simplest ways to estimate coverage is to multiply your yearly income by 10 to 12. So if you make $50,000 a year, you should target something like $500,000 to $600,000 in coverage. But that doesn't work for everyone. So another method is to list financial responsibilities your family would struggle with if you were gone. Mortgage balance, kids' education, unpaid loans, childcare costs, and daily living expenses. Add those up and boom, you have a more realistic number. Most families in America with kids end up needing between $300,000 in coverage, even if they don't realize it. Now let AS talk about how to save money because insurance companies love charging extra when they can. One huge hack is buying young. Every year you wait, your premium rises because you become a higher risk. Locking in rates in your 20s or early 30s can save you serious money over the long run. Another major factor is health. If you smoke, your premiums can double or even triple. So quitting isn't just good for your body, it's good for your wallet. Also, don't just buy from the first company you see on a billboard. Compare quotes from multiple companies online first. And here's a lesser-known trick. Paying annually instead of monthly can save up to 15% because companies charge processing fees for monthly plans. If you're trying to save money, term life plus yearly billing is the killer combo. A common mistake people make is assuming only the person who brings in the money needs life insurance. But think about this. If a stay-at-home parent passes away, who pays for childcare, house management, schooling rides, cooking, and daily responsibilities? Those services might not be paid in cash right now, but replacing them costs real money. So coverage should protect everyone who contributes to the household, financially or not. Another mistake is waiting until there's a medical issue. Once you develop something like diabetes, heart issues, or even high blood pressure, your rates can skyrocket, and sometimes you might get denied completely. Life insurance rewards early planning, not last-minute decisions. Let's bring this to life with a simple story. John is 32, married with 2 kids, working full-time. He buys a 20-year term policy worth $600,000 for just $28 a month. At 45, he dies in a car accident. His family receives $600,000 tax-free. His wife uses it to pay off the mortgage, set money aside for college, and cover daily expenses without begging relatives, taking loans, or starting a GoFundMe. That payout didn't change the tragedy, but it changed their future. That's the power of life insurance, not stopping the storm, but helping your family stay upright after it hits. All right, family, that's your full crash course on how to protect your loved ones on a budget without getting ripped off. If you learned something today, hit that like button, share this video with someone who needs it, and drop a comment saying, "I'm securing my family." Make sure to subscribe to Insurance Hacks America, where we turn confusing financial crap into simple step-by-step hacks that save you money and protect your future. Remember, Life insurance isn't about fear. It's about love. It's about making sure the people you care about can keep living the life you planned, even if you're not around to guide them. Stay smart, stay protected, and I'll see you in the next video. Peace out.